Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. Before we get to our next guest, let's take a look at those four major indices. We are off of session lows, but still deep in the red. The S&P 500, the benchmark, down 3.4%. Dow Jones Industrial Average down about 3%, down over 1,000 points. NASDAQ 100 down 4.6% off of those session lows, and the Russell 2000 off 81 points, down about 4.2%. We've got the VIX back above 31. We've got Treasury yields at 10-year yield at 3.09%, highest level in nearly 4 years. And then also we've got Bitcoin down about 7%. So good look here at the market. All right, let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome to the show, Landon.
Hey guys, thanks for having me.
Yeah, no worries. We're going to talk about DoorDash here today. But I just kind of wanted to get your overall take on the market action here. When you look at, everything's deep in the red. It's just a risk-off day across the board. It's kind of scary right now for investors.
It is. And you know what? It makes me think back to many other times when the market sold off. And what I'm looking for personally is that day where everybody's panicking and it's a 5 or 10% sell-off, and I feel like that's the bottom, right? When everyone gets shaken out, and that's the kind of situation you need to make a bottom. Until then, it's just this back and forth uncertainty where everybody's not sure. One day, yesterday everything's great, we're going to bounce back today. Oh no, it's doom and gloom. So yeah, I think until you get it's always fear and greed. Until you get just a magnitude of fear, you're not going to have a bottom. And I don't know that we're at that huge magnitude of fear just yet. Yeah,
I agree with you there. We haven't hit those Monday lows yet that we put in, but that could be an area of support, but it could not be. If we fall below there, maybe this snowballs into more fear out there on Wall Street. So we'll have to wait and see on that. But we're discussing DoorDash. This thing's hitting 52-week lows today, down about 52%. Landon, people are going out to eat now. They're going out to places. Is DoorDash losing some of that positive sentiment that you guys have seen lately?
Yeah, I tell you what, this is, obviously with COVID, they're in the right place, right time. Everything worked out perfectly for all those companies, delivery companies, and not just food delivery, but every kind of, curbside pickup or delivery of any other good. But now things are starting to get to the point where people are going out to eat. They've got a lot of pent up demand. And what's crazy is it's almost as if the more customers they have, the more they lose money. So they're in a tough spot anyway. They're either going to lose customers or lose more money. But I can tell you that DoorDash is the clear leader in the space, absolutely clear leader. They have, I think, 59% of the total market. Uber Eats is 24, Grubhub's 14, and Postmates, if you want to count them, they're chipping in 3%. So DoorDash is doing extremely well as far as in the sector, but I think it's a tough sector to be in. And really, when you look at it long term, I think this is a situation where the only way this type of business makes sense is with an automated car. You have to get rid of the driver. Once you do, I think it's fine. It's going to be a great business. But until then, it's just too difficult. And with people going out to eat more and the economy may be turning a little bit, things getting way more expensive, people have less disposable income, you're going to find yourself in a situation where, going out to eat is maybe cheaper than getting a DoorDash or getting an Uber Eats because it's just so expensive with delivery fees and the markup. So I don't like this industry. If you're going to have to pick one, I think DoorDash is the clear winner. They're moving in the right direction as opposed to a lot of the others who are really falling off. But everything is kind of going against them right now. I mean, if you look at here, we've got people talking about eating out. This is on a year-over-year basis, 25% up. And then you can see how all the delivery companies are doing. DoorDash, again, it's doing the best, but it's, as you can tell, it's in a tough little sector. It's a tough little industry. And so they're doing the best of theirs, but you just don't want to be in a situation where it's a lowering tide and you're the best ship. I'd rather be in a rising tide situation. So there's a lot of industries I'd rather be in than this one. But again, if you're forced to, I'd pick DoorDash.
Landon, I'm looking in my old finance book here, and more customers equaling more losses. I don't see the chapter on that where that's ever a good thing. I don't think the more customers you get, the more money you should lose. I'm not sure that's a long-term strategy.
Yeah.
And, they're growing and they're scaling, but their margins are dropping. At the same time, this is becoming a low-margin business. Even though they're the best at this, it appears, I'm kind of with you. Number one, it appears like when you look at it closely, it's a big add-on to the price of the meal. And I have a really tough time, even though, here's the question. Let me get to my question quicker. Has this digital company, right, who goes to the digital consumer, have they stuck enough where they can make it to profitability? There's the real question, right? Are enough people using this platform and unwilling to leave to make it worthwhile? Because not everyone lives in downtown Chicago or a big city where this becomes much more prevalent. Out here in the burbs, you don't get food delivered unless it's pizza. Landon?
Right. So they got 25 million monthly active users right now. That's up, I think, 20% from last quarter. Doing well there. But I completely agree. And, for me, this is a situation where, yeah, they're smart. They've done a good job of dominating against their peers, and they're expanding. It's not just food. They're doing all kinds of errand running for you or deliveries of other products, which is great. But I don't know that there's any loyalty in this game, right? I think that everybody's you're not going to flip on a whim, right? But I do think that it's not going to be hard for a new competitor to come in and take over. I mean, if you look at some of these names that, like I said, Postmates 3%, Grubhub 14%. They used to be a lot bigger than that, and now they're not. DoorDash is almost 60%, but that's not saying they always will be. And I think that really with this industry, you've got a situation where, again, I think it has to be driverless cars to be profitable. And the moment that happens, they're going to be flooded with competition, and it's going to be from places that they're maybe not thinking about or maybe not ready for, like an Amazon or a Tesla or some of these other competition. You never know who's going to be out there coming in. Once it's a proven model and you've got a driverless car and it's really easy to get the margin, then I think it's going to be DoorDash has a lead, but everybody's coming for them because now everyone identifies that this is a profitable industry. So I feel like they're getting the lead in a bad industry that is ready to be disrupted. And once it's disrupted, their number one spot's up for grabs.
Yeah, and then it's going to be consolidation in that industry. You would expect, I didn't even know Postmates still existed, Landon. I don't even know if they have it in Chicago. But Kevin and I talked about Lyft the other day ahead of their earnings. And, that was one of my points is, here it is, they're playing a waiting game for driverless cars so they can get rid of the driver and their margins will improve. But that's still 5 to 10 years away for the most part, I would think. And as it kind of keeps getting pushed back, where, they're not going to have, a ton of driverless cars in 2023 or 2024. This is longer down the road. Can these companies, based on your data, and it didn't seem like it's bad for DoorDash, the stock price has done really poorly, and that's just because they don't make money, and the market is punishing companies for not making money, right? So based on your consumer data, can any of these companies survive? Or is this going to be like a washout from the year 2000 when some e-commerce companies and high flyers in 1999 just went out of business?
Sure. So, tough to predict, but my guess is that you've got this lead going into this automation shift that's going to happen eventually. I don't know who the leader is going to be in 5 years when that shift happens. Hopefully, for DoorDash investors, it remains them. But I think then it's going to be a situation of they're going to see immense competition, and it's either going to be it's going to be a logistical expertise that comes in and dominates this industry. That's kind of why I thought of Amazon. But then it's either going to be they up their game in a significant way using that AI technology with driving, or they get acquired. And that may be the most likely route. It may be a situation where once the driverless cars come out, Amazon or whoever says, all right, we'll take the leader and we'll run it from here. I think that's the most likely success scenario. There are a lot of failure scenarios, though, and in getting there and with that runway required to that point is tough, and because they're going to have to continue to increase prices. to make up for all the increased costs with inflation, supply shortage, and everything else. And again, they're going against the trend right now. So I don't like these companies long term. I think it's a tough bet. If I had to pick one, it'd be DoorDash. But yeah, even if when you look at happiness, I mean, they're all very low. Grubhub's at 57%. That's the highest. DoorDash is at 47. Uber Eats is at 35. So people are not happy customers of these. It's more of a, I don't want to say necessity because it's not a necessity, but if you want something delivered, you got to go with one of these. But people generally are not happy. I think that will change with driverless cars. I think they'll be more efficient. They'll be more on time, all that. But it's a long time to wait when you could be putting your money in a lot of different places.
Yeah, and the last time when my kid was home on spring break, he ordered a burrito that was $23 because he got it through DoorDash. And I go, now I understand the unhappiness because I was very unhappy at that point in time. Now, if you guys had a score going into this for earnings, Landon?
Dead neutral going into this earnings score. So yeah, I mean, we're staying on the sidelines.
Yeah.
Any of the others I would be bearish against, but this one is the leader of the pack, and we're neutral.
Yeah. Best house in a bad neighborhood or least worst house in a bad neighborhood? I'm not sure how you want to phrase it. All right, great stuff as always, Landon. Appreciate it.
All right, guys. Take care. Thank you.
All right, that's Landon Swan, the co-founder of LikeFolio.com.